Fed Chairman Jerome Powell just spilled the beans on what the Fed is planning to do in 2025. And to cut right to the chase, it looks like rates aren't going anywhere anytime soon. This week, Jay Powell testified before Congress that he believes our economy is in a strong place. This runs counter to the CPI information we got today that showed that inflation might be coming back. In this video, we'll cover the main takeaways from Jay Powell's testimony, and then we'll take a closer look at the company Nike, because they have some really fascinating things going on. Their new CEO just gave his first sit-down interview to Fortune magazine, where he laid out a pretty compelling plan for the struggling company's future. But first, it's been a busy day in the markets. CVS stock is up 14% after they beat expectations. They recently got a new CEO, and their new turnaround story is starting to work out. And Tesla popped a little bit today. The stock's up 2.4%, and that's coming off the tail of a really rough week where the stock dropped 9.66%. Disclosure, I am a Tesla shareholder, and I have been since 2016. But this is mostly due to fears around Chinese competitor BYD. Not only are they selling more cars than Tesla globally, but they also just recently announced a partnership with AI company DeepSeek. All right, let's talk about what Jay Powell said. And right up front, we'll call it the elephant in the room, and that's what's on traders' minds, and that's interest rates.
If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer.
He's saying there, when he says maintain policy restraint, that rates will remain at their current level. And we got CPI data released today that shows that inflation is starting to tick back up, and this greatly lessens the chance of a cut coming anytime soon. Rates are really important, but as intelligent investors, we really only care about long-term rates. Buffett said it would be the one question that he would try to get answered if he could see into the future. But I think there are bigger issues other than interest rates that Jay Powell covered today. First and foremost is, will the Fed remain independent under the new administration? President Trump posted on his Truth Social platform, quote, "Interest rates should be lowered, something which would go hand in hand with upcoming tariffs. Let's rock and roll, America." Now, the Fed is supposed to be independent, and I don't really like this. We need to have an independent Fed. They're supposed to be the grown-ups in the room. They keep the long-term perspective in play, and we don't just go on election cycles. You can really quickly see that being a race to the bottom, regardless of who's in office. Economists are already really concerned with tariffs causing prices to rise too much. The Peterson Institute for International Economics reported that Trump's policies could stoke inflation. And here's what Jay Powell had to say about that exact report.
There are many organizations, public and private, whose role is to speculate publicly about what this might be. What we're doing is we're reserving judgment until we actually know what the policies are.
But if we have a higher cost of living, does that lead to higher interest rates? The CPI goes up, or CPE, excuse me?
Well, if inflation goes up in general, forget about tariffs. In general, of course, we will use our tools, which is the interest rate, to bring it back down to 2%.
He answered that greatly. He's basically saying, we're going to look at the data and we'll run with the data and we'll make our decision based off that. And then, outside of the topic of tariffs impacting inflation, he was asked about Doge's impact on the Fed.
If Elon Musk and his Doge bros were to walk into the Federal Reserve, intimidate staff, access classified data, and take control of the agency, the same way they did USAID and the Consumer Financial Protection Bureau, would that help or hurt our economy?
We don't have that happening. I'm not going to speculate.
Now, that Congresswoman clearly asked a super partisan question, and good on him for not taking the bait. We really have to keep the Fed as unpoliticized as possible. And then the last major thing he said during the testimony is that the Fed has no plans to release a central bank digital currency. So crypto bros are a little sad today, as his term doesn't end until May of 2026. But those were the big takeaways from this week's testimony. He sees the economy as strong with 4% unemployment and inflation approaching the 2% target, but that might be a little bit of a moving target given today's CPI data. And then he's not in a hurry to lower interest rates, but he's ready to if things change. Okay, let's turn to Nike now, because they really do have some interesting things going on. The incoming CEO, Elliott Hill, sat down with Fortune and is saying Nike's back. And that's a bold statement, considering the stock is at a 4-year low. And their most recent quarter was the mother of all bad quarters. Revenue fell 7.72%. But this incoming CEO seems to be the great new hope for Nike. I actually wrote analysis about 6 months ago on Nike, where I talked about how John Donahoe, the then CEO, should be fired because he didn't really understand the company. He was more of a consultant than an actual operator. And that turned out to be really prescient. 2 months after that post, he was fired. And I was really hoping that they would pick Elliott Hill. The main reason I was excited about that is because this guy bleeds Nike. He's been at the company since 1988 when he started as an intern. So I trust that he really understands this business. And he's identified the two problems outside of their financial roles. They have cultural issues and strategic issues. In that interview with Fortune, he laid out a few key ways that he plans to turn things around. The biggest one is refocusing on sports.
Where we're headed, which is around celebrating the passion and emotion of sport, that excites them, that gets them motivated. That's what we have to do more of. That's when we're at our finest, is when we put athletes at the center of everything we do. We take the insights from those athletes. That's what drives our product innovation pipeline. That's what drives those emotional and inspiring stories that we tell.
And he's not just armchair quarterbacking this. They're focusing heavily on product innovation. So I love that they're already looking that far into the future and they're really focusing on sports. But the only thing I like more than focusing on your core operations is protecting your margins. Actually, I'm just kidding. Core operations are definitely more important than margins, depending on the type of business. Here he is on margins.
We had become too promotional in between those moments. We were even leveraging promotions to drive revenue. And frankly, that's not great for margin. It's not great for the brand. It's not great for our wholesale partners because, they end up competing against us and profitability matters for them.
And as you know, if you've been following this channel for a while, last year I took a $30,000 position in Lululemon. So athletic apparel companies are kind of in my circle of competence. And one of the hardest things when you're trying to understand an apparel company is trying to figure out what their moat is. And that's arguably the most important thing in Buffett-style investing. And the major moat that apparel companies have is their brand. And the definition of a good brand moat is if you're able to raise prices and people will still buy your product. Nike fell into the trap of discounting to make sales, and that's very dangerous. That dilutes the brand and kills your margins. So it's really great to see Nike focusing on delivering really good products as opposed to just discounting to make the sale. They're also investing heavily on their marketing and storytelling. And if you saw their Super Bowl ad, you can see exactly what they're targeting into. Women's sports, which is growing like wildfire this year. So Elliott Hill is saying all the right things. The question will be whether or not he can execute. I won't be taking a position in this company just yet, but it's on my watch list. I want to see things start to turn around. Yeah, I might lose out on a couple percentage on the way up, but I do think if Mr. Hill can actually execute on this plan, the stock could easily double or triple. So I'll miss the 15%. That's fine. But if you want to see my full analysis, as well as my past analysis on Nike, where I can go way more in depth, you can check it out on flankinvesting.com. We're building software that helps individual investors invest smarter. If you want to learn more about how we're doing that, there'll be a link in the description, as well as a link to our free Discord. I hope to see you over there. And if anything in this video didn't make sense or you're new to Buffett-style investing in general, then I recommend you check out the course we just released, where we walk you through exactly how Buffett picks stocks. It's included in the membership to Flank. And if you like this type of content, please consider giving us a like and subscribe so we can get this content out to more people. That's all for this one. I'd love to hear what you think about Jay Powell's testimony or the chances of Nike's turnaround in the comments below. We'll see you in the next one.